Hi, here we are in the backyard on a nice Sunday afternoon. I just, was sitting in the car and I was trying to think about what might be important that we're maybe not talking about. So, here's what I thought. I thought about the cost of buying real estate. And you can reduce the cost when you purchase a commercial real estate investment. But you got to think about your three main costs. There are your purchase price, your operating expenses, and your mortgage loan interest expense, meaning the cost or the price of money. Maybe you could add loss of revenue from bad management to that list, or also consider additionally potential revenue from good management. But I'd say basically it's purchase price, operating costs, and your mortgage loan business expense cumulative. So what we're going to talk about here in this video will be to discuss the total cumulative cost of your interest expense and compare that with the purchase price of the property. Now, commercial mortgage loans, the rates are lower now than they have been in a long time, but they've not gone down as fast as treasury instruments, treasury bonds, treasury notes. And this is because the government and the Federal Reserve have been buying treasury instruments, and lenders have a fear of a future increase in interest rates, and investors have wanted a safe haven for their invested dollars. As an example, 5-year treasury notes are about 1.5% interest. You get 1.5% a year if you invest your money for 5 years. And 10-year treasuries are yielding about 2.5%. Not so great. So a lot of people for that reason, are looking to real estate. So this is down from several years ago. Now, there's not much more downside unless you expect interest rates to go to zero. And I can't say that's never happened before. It happened, they're really low in Japan, but some people think the interest rates are going to go higher from here. So the upside risk is possibly in store for interest rates. So potential buyers have three main decisions. What type of property do you want to buy? When do you want to buy it? And where do you want to buy it? Now, many people agree that Texas is a really good, strong economy, and it's stronger than most other areas of the United States, and it will remain to be strong just because of our friendly atmosphere toward business and to landowners. Prices have not dropped substantially, and they have held their value for the most part in the last couple of years. Now, so unless you include the sales price of properties owned by out-of-state owners who poorly and badly manage their Texas properties, then you would say that prices have held up very well. Several years ago, out-of-state investors were rapidly buying income properties in the major Texas cities. So now many of these out-of-state owners are bailing out. The weak sisters are getting out. They've decided that these assets are hard to manage by long-distance telephone calls. So well-managed properties have held their values very well. So we've established in this discussion that real estate in Texas is a good investment if it's well managed. So let's get back to the subject at hand here, and that's total cumulative interest rate expense. Real estate buyers should know and understand that your total cumulative interest rate expense is one of your main expenses. Using a 6% mortgage loan as our variable baseline on a $1 million commercial mortgage loan at 6% with a 30-year amortization, the total interest expense cumulatively paid is about $565,300, about $565,000 after 10 years. So if you wait for mortgage loan interest rates to increase by 100 basis points, or about 1%, to a rate of about 7% interest, then your total business expenses for 10 years cumulatively would total to be $656,500, which is $100,000 more total cumulative interest rate expense because you waited for interest rates to go up. This is almost 20% more total cumulative interest rate expense. So the cost of your $1.3 million property on your closing statement, your purchase price, your total cost just increased $100,000 because mortgage rates went from 6% to 7%. So your total cost went from 1.3 to 1.4. So your total cost went up by 7.6% because you didn't buy when interest rates were lower. So prices of real estate transactions change every day, and the price of loans and the price of money changes every minute and every day. So please consider your total cumulative interest rate expense when you're trying to find a good deal on a commercial real estate property. If you want to talk about it, call me on my cell phone at 281-236-8189. Go to my blog, Houstonius.com, HoustonIUS.com, and let's try to make this to be a very good transaction for you. Thanks a lot.